Hello everyone, hope everyone is doing good. In this video we're going to be breaking down one of the most simple ways to define trend. When I first started day trading, reading trend was absolutely one of the hardest things to do. People always talk about being on the right side of trend, but how do you do that? So I'm going to give you a little simple tip. It only involves two indicators on multiple different time frames, guys. You're want to throw on a 9 EMA, which is going to be this gray line right here. As you can see, the 9 EMA, moving average exponential, a 20 SMA, and a 200 SMA. So if you're looking at it daily, wait for that 9 and that 20 to cross. That is going to be a key telltale sign when you're going to want to be bullish when it crosses to the upside. As you can see, it crossed right here. And as you can see, we had some big green days that ensued. A decent trend, and now we're finally losing that trend. Looks like we're going to cross the downside. As you can see, I'll show you guys multiple times. Cross down here, right, or cross right here, cross the downside. As you can see, lots of sell days ensued. We lost the trend for a little, and then lots of sell days continued to ensue. So, right here also, trend up. Right here, trend down. Right here, kind of chopped. Right here, trend down. So that's one key telltale sign. You're looking at the daily, it's a very obvious sign, and then you're going to be able to want to, it just depends on how you want to trade it. You know, when it crosses, maybe you say, hey, I'm trying to look in, hopefully in the morning we get a dip, we put in a higher low, and then we go. That's kind of, as you can see, we get the wick down, then we go. This one we immediately go. You get the wick down, we go. We kind of close here. This one didn't work. Get the little wick, we go, and then we finally are on the other side. And as you can see over here, the sell side, we get the wick up, and then we crash, the wick up, we crash. That's kind of would be the trade that I'm looking for. So that's how you look for it on the daily. Let's look at it now on a hourly, because you can do this on a daily, you can do this on an hourly, and you can do this on a 5-minute. I also do it on a 5-minute. But so on the daily, you're going to be looking at the 9 and the 20. On the hourly, what you're going to be wanting to look for is the 9 and the 200. When those cross, that is when the trend will change on this chart. And they're all kind of simultaneous. They're all kind of very similar times that they're going to be changing. But that's kind of when I'm looking for it on the hourly, if I see the 9 and the 200 cross. And I normally want to be looking at it on a, I'll probably be wanting to look at this one with, you could look at it with pre-market data, without pre-market data. If you want, you look at it on futures. It kind of will tell you a little bit quicker when it's going to happen, or with pre-market data on. Or you can look at it without pre-market data, and that's also when the big moves kind of happen. Sometimes if you have pre-market data, and look at futures, it'll happen a little bit sooner. But as you can see, we get that cross, and we're very bullish, and then finally we're kind of looks like we're about to cross the downside. We're gonna be pretty bearish. And as you can see, I'll put it on so you guys can see for a longer time frame when this happens. Right here, as you can see, I have this circled right here, but as you see this happen right here, very bearish. Right here, very bullish. Right here, very bearish. So of late, when they've been crossing to the downside, they've been putting in some crazy moves, just because I think we're in a very bearish market. So the moves to the downside are much more dramatic, much faster, kind of get respected a little bit more. As you can see, these moves to the downside, it runs into the 9, fails, runs into the 9, fails. We'll go right over here, runs into the 9, fails. And then another nice setup of it is once it does cross that first touch of it, of the 9, after it crosses, normally it's pretty lethal. As you can see right here, the first touch was lethal, wicks it, runs up. And then let's see if we look at it on the bearish side. The first touch right here, lethal to the downside. You can expect new lows after that first touch. That's kind of one of my favorite setups, but it keeps you on the right side of trends. As you can see, you could also swing trade this, you could day trade it, but it keeps you on the right side of the trend. If you're day trading, you kind of know, hey, maybe I want to be a little bit more bullish. Hey, maybe we're kind of overextended on this run. We're finally breaking. Maybe the 9 and the 20 are crossing. Who knows? On the daily, hey, we cross. We want to be a little bit bullish. So what to remember, though? The 9 and the 20 on the daily. Let's go back to it. 9 and 20 on the daily, right? That's what you want to be looking for when those cross. On the hourly, you want to look for the 9 in the 200. And on the 5, you can also look on a 5-minute, guys. And the 5-minute, it's not going to be as accurate, but it still is going to work. So on the 5-minute, as you can see, We cross right here the 9 and the 200. When the 9 and the 200 cross, you could expect to see action that way. It's not as consistent, it's not as good, but it's a decent setup. When it crosses, you can wait for the first touch and get new highs. A lot of days it's an all-day hold. But as you can see, when it crosses, you get that first touch and you put in the new lows. But it kind of helps define trend. It's not a bad tool also. It's just a little bit more, not as accurate. The other ones are a lot more accurate, but this one's also not bad. You can wait for that first touch and then you can expect new highs to ensue. So, guys, if you enjoy this video, please follow, like. It really helps the channel. Also, you guys can follow me on TikTok. I do upload tons of shorts on there, or tons of little videos on there. But hopefully you guys enjoyed this video. I will be posting more content on the biggest struggles you'll probably face as a beginning day trader. And these were the struggles I faced, how to be on the right side of trend. So hopefully you guys enjoyed this video. Just remember those 3 moving averages on the 5, the daily, and the hourly. They really are important. They can help you be on the right side of trend. So have a great day, guys. Please follow for more.